Kia ora, I'm David Chaston with 90 at 9, brought to you by interest.co.nz. This week, everything you need to know in 90 seconds at 9 o'clock with news. Geopolitical risks remain high, but they don't seem to be escalating from here, and markets are taking that as a positive signal. But benchmark interest rates are back rising again. But first up today, global banking giant HSBC has announced a doubling of its profits in the third quarter of 2023. They made $13 billion in the 3 months to September, benefiting from higher global interest rates. Second, General Motors has apparently settled its dispute with its union, who have been on strike, the last of the big three American car makers to resolve the dispute. It appears, like the other settlements, the UAW has prevailed in all its substantive claims. In Japan, all eyes are on their central bank, who later today are expected to make a significant shift in policy and let some of their interest rate targets rise. And the World Bank has been assessing the prospects for commodity prices. It sees oil prices falling away, assuming we avoid a sudden supply-constrained geopolitical shock. Their base case has oil falling from here to the low $80 barrel range. But in their worst-case scenario, they see $150 a barrel oil. They also see food prices falling as rising supply more than makes up for rising demand. An exception is for rice, but they do not see price being a threat to future global food security out to 2025. In the current circumstances, they have a very sanguine outlook with the usual caveats about unexpected shocks. Meanwhile, EU sentiment continues to weaken, but there might be some relief in store. In Germany, with the help of easing food inflation, their October CPI inflation rate fell to 3.8%, sharply lower than the September 4.5% rate. The October rate is their lowest inflation level since August 2021. In Australia, September retail sales rose more than expected to be 2% higher than a year ago, pumped by the 0.9% rise in September from August. The year-on-year inflation is far less than inflation, but the more recent rise is sharpish and may encourage the RBA to hike, thinking that along with earlier 5.6% monthly inflation indicator data, the risks from waiting are not worth taking. The US Treasury 10-year yield is up 4 basis points from this time yesterday, now at 4.89%, and the price of gold will start today at $1,998 an ounce. That's down $6 from yesterday. And oil prices have fallen $3 to be just over $82 a barrel in the US, while international Brent price has fallen a bit more to be $86.50 a barrel. And the Kiwi dollar starts today at 58.3 US cents and marginally firmer from yesterday. Against the Aussie, we're softish at 91.6 Australian cents. Against the euro, we're still at 55 euro cents. That all means our trade-weighted index starts today unchanged at just on 68.2. Get more news about the economy in New Zealand from interest.co.nz. Kia ora, I'm David Chaston, and we'll do this again tomorrow.